looking at October, November 2016. It's a 2-hour paper, 100 marks, 1502. First step is to always look at the proposed timetable, okay? And you're picking out the easiest questions to do. So you can see 1 is the most difficult question. It's out of the most marks, it's going to use most of your time. You can see that the bank recon is only 18, that's quite short, and then multiple choice, which is 5 marks. So I would have started with the bank recon because it's easy and it's short. Okay, so I could have finished the bank recon in like 10 minutes or 12 minutes or 15 minutes, worst case scenario, and then you still got 7 minutes to give to the other longer questions. Okay, that's exam technique. Make sure you pass the exam and stick to the time allocation. Don't go over the 40 minutes, the 28, the 22, the 24, the 6. Okay, so obviously we're going to start with bank recon, which we've done. Now we're going to look at all the other questions. So I'm just going to follow the order of the questions. I'm going to do question 1 now, PPE and the statement of financial position. So I go to question 1, and I see it's out of 33 marks, 40 minutes, and I can see they've given me a trial balance, which I need. I need to know what those accounts are, and I've got adjustments, and that's it. Then they say prepare the PPE note to the annual financial statements, and they say prepare the statement of financial position, right, in line with IFRS, round off to the nearest rand, all of that. So what do you need to do? Draw up your templates. Okay, so what does the PPE note look like? Well, it's a note where you have different columns for the different assets. So property, plant, and equipment. This is note number what? There's no number, so we'll just call it the note, note 1. Okay, and then highlight that, and then you would have carrying value or balance slash carrying value, brackets. What was the time frame? In the question they said 30 June 2016, so beginning would have been 1st July 2015. Okay, that's the beginning. You calculate carrying value cost minus accumulated depreciation, and then you'll have adjustments for additions, you'll have adjustments for depreciation, you'll have adjustments for disposals. Okay, so this is what you learn. That's template, format, layouts. Okay, then you have the same thing at the end, but for 30 June 2016. 30 June 2016. Okay, so that's the format that I'm going to have to stick to, provide, in terms of a solution. Obviously, that's an important total. Okay, and that's an important total. And then I'll have totals for all the different assets. One total there, one total here, for all of it, however many we've got. Let me just copy it quicker. Okay, depending on how many assets you have. Did they? Okay, hold on. Did they want the total column? They said your answer must comply with IFRS. Notes to the financial statements and comparatives are not required. Round off all amounts to the nearest rand. Okay, so they didn't say leave out the total column. So you would have a total for the assets that you've got, and that's the end of that question, right? And then question 2 is on the next page. Yeah. So it's just one page where they've given you all that information, and you need to take that through to your notes. Okay, is there a question about this? Ask then. It's fine. It's helpful to other people as well.
I've used the wrong dates.
You used the wrong dates.
Yeah.
Okay, dates aren't so important, but you should try be accurate, because if I look at the question said for the year ended 30 June 2016. So if that's the year ended,
on top. I've put it on top.
yeah, that's fine. It's you can put a heading. Okay, this is just a note. So this would have been notes to the financial statements, notes to the financial statements for the year ended 30 June 2016. I doubt they'll even mark that, but...
No, but I'm not talking about that. I'm talking about this, the one
yes.
I've written 30 June 2016.
Yeah, but that's
and then
not
at the bottom, I have a total different.
The 1st of June. Okay, well that's fine. That's why we're fixing it and we're checking it. So
But
that's why.
where to get it.
That's why we're doing it. That's why we're doing it. Okay, so that's why we're going through the question to get there. Okay, so you've got the right template. You just need to fix the dates. Then we need to look at all the information in the question. Okay, that's not it though. They also asked for what? Statement of financial position. That's what they said. Oh, there they did say the total column need not be shown. It is there. See it? There, need not be shown. So you don't have to show the total column. Okay, then they said statement of financial position. So what does that look like? Assets, liabilities, right? Statement of financial position. Okay, you can put the date if you want to. It shouldn't really carry a mark, but you might. So maybe put it in case at 30 June 2016. And then you've got assets, you've got non-current and current. And then you'll have total assets. Assets, and then exactly equity. Under equity, you'll just have one line item capital, and then you'll have a heading for liabilities. Okay, and under liabilities, you'll have non-current and current. And then you'll have total equity and liabilities, so that would be a total that you would have there, and this would be for equity and liabilities. Right, and now you're ready to do the question. Okay, so that's what I do when I start the question. Get the templates. Once I've got the template, then it's easy. Okay, you can spend 5 minutes doing that. It's 5 minutes well spent because now you know exactly what to look for. I'm looking for this, I'm looking for that, I'm looking for things to put in my PPE notes. Make sense? Okay, so now this is how we do it.
About the dates, because I don't know where you get the dates.
Where do I get the dates? Well, what did the question say? 30 June 2016 is what? Beginning of the year or end of the year? Year ended. How long is the financial year?
12 months.
12 months. So if this is the year ended, what would the start have been? 12 months ago. Okay. Alright, so that's the first bit. Draw that up. Now we need to get marks. Remember, this is the most difficult question in this paper. Okay, so it's meant to be tricky, difficult, challenging, because you can see carries the most marks and it's for the most amount of time. Okay, so this was the hardest question in this paper. Okay, so what do? We go down the list and we pull amounts through to our disclosure. So first line item, capital. Do I need it? Yes or no? Yes. Capital goes under equity. There's capital. There's the amount, open brackets, 180. Ooh. 180. 180,000. Okay, what's next? Drawings. Do I need it? Yes. Drawings affects equity. Capital. Minus 35,000. Okay, what else? Land and buildings. I know land and buildings is property, plant, and equipment. So that's special. Goes here. Land and buildings. Okay, there's your first column. Right, I would put it here as well. Land and buildings. But then I would just put a note CPPE note. Okay, because then you'll just take the totals through to your assets. Okay, you would have just one line item. Normally you just have property, plant, and equipment, and then one total, which is the total column, but they said don't have to do the total column. Okay, so that wasn't asked for. You can if you want to, but it's not necessary. Okay, vehicles, there's another one. Okay, the land and buildings, at cost. What date is that for? There's it. Okay, that's the trial balance. Okay, so if it's a trial balance, it's the date for 30th of June. So land and buildings, 250,000. So 250 is going to go here. Okay, 250,000, 250,000. Okay, because that's what they told you in the question. They said that was 250. Right, you read the date, you read the line, you put it in. Oh, but look at the date though. Okay, that's land and building, that's fine. Vehicles and equipment, that's the date. Okay, so here it says 1st July. There, 1st July is what? Opening balance. 1st July is the beginning of the year because that's 30th of June. Okay, so if it's 1st July, it's 95 and 65. Vehicles and equipment. So vehicles here, equipment here. Okay, it's a PPE note. They tell you in the question that the cost is 95 and 65. So 95 here costs, 65 here, straight from the question. Vehicles costs 1st July. Equipment costs 1st July. 95, 65. There's 95, there's 65. I've gotten my easy mark. Okay, what else? Accumulated depreciation on land and buildings. Okay, so we are depreciating the land and buildings. This was for year end because it's 30 June 2016. So this would have gone over here, 128. Okay, remember it needs to be a negative because it's accumulated depreciation. Okay, so I can't show brackets here. You have to show it as a negative. Okay, I'm going to show it in red. Okay, because that's the accumulated depreciation. That's what they said. Accumulated depreciation on land and buildings, 128. This is at 31st of June, so it's not at the beginning, it's at the end, 128. Okay, so I'm literally taking it straight out of the question. Okay, so you had 128. Obviously, your date was just incorrect. You did like the dates wrong, but it's fine. Okay, you still got the right idea. Just need to fix it going forward. Okay, right. Accumulated depreciation of vehicles. Notice 1 July, so that's beginning of the year. That's what they give you in the actual question. So 53,500 is going to go beginning of the year. And equipment 12,350. 12,350. Okay, given in the question, straight from the question, those are the two figures. Debtors control, what is it? It's a current asset. So if debtors is a current asset, it goes under here. Debtors, open brackets, 12,300. Okay, I know what debtors is. Debtors is a current asset. Okay, trading inventory. Notice 1st of July. That's opening stock. I don't disclose opening stock. I disclose closing stock. So I want trading stock. Okay, open brackets. Not going to put anything because that's opening stock. But I'm going to make a note of it. Why? If I've got opening stock, I've probably got what periodic inventory, or well, what system of inventory management? Periodic. Okay, so when you see that, that's a clue that you probably got periodic. Okay, bank 1 July, that's beginning of the year. 4,500. It's an asset. Bank goes under current. 45. Long-term loan. A long-term loan is a non-current liability. 70,000 here. Long-term loan, 70,000 there. Creditors, 23,400. It's a short-term liability. Creditors, brackets, 23,400. 23,400. That goes there. Okay, next. Depreciation, 8,000. That's for the buildings. There's the buildings. So depreciation you've got as 8,000. Okay, so this is something that you would circle because that means you've already counted for the depreciation. So it's probably going to go here. We'll put it in, but we might have to adjust or change it depending. Okay, again, these are going to be negative. So I'm going to show that in red. Okay, you would show negatives in brackets. Accountants show negatives in brackets. There will be a bracket around that figure. Okay, these are your easy marks. Now I've looked at all of that stuff. I can cross it out, tick it, and I can move on. Okay, so now we need to look at addition information. Now we need to go line by line by line by line by line, adjust and show workings for calculations. Okay, so number one, the trading inventory balance at 30 June 2016 was that. There we go, easy mark, that's closing stock. I know closing stock goes here. We spoke about it earlier. I didn't put in an amount. I can now put in one, 23,500. There's your closing stock. Okay, so that's done. Complete, move on. 2. A vehicle with a cost price of 45 was bought on 30th of December 2013. Second, a vehicle with a cost price of that was bought on that date. and sold on that date for that amount. Depreciated vehicles provide a straight line method of 20% per annum. When you see that, what's the first that you're thinking about?
You need to work out the depreciation.
And how do we do that?
That's what I did.
Okay, you drew up a table. Table's fine. I would draw a timeline first and then draw the table if I need it. Okay, so this is what we would do for the workings. Okay, so workings. Right, this is point number 2. Okay, requires a table. I know 1st of July is beginning of the year. I know 30 June is the end of the year. 30 June 2016. Okay, so there's the start, there's the end. I need those 2 dates because I need to know what happened during the period from 1st July to 30th of June. If I know what happened, I'll know how to account for it. Okay, so there's your timeline. You have to draw a timeline when you do depreciation. It's the only way to do it and get it right without too much hassle. Okay, vehicle with a cost price of 45 bought on 30th of December 2013. That's outside the period. Let's show that. 2013. Okay, December 2013. 31st December 2013. You need to put that in as well. 31st December 2013. Okay, what else? That was 45 costs. See, notice I'm not doing any working. I'm just taking the information, putting it on a diagram, and then look at the diagram later. Okay, reading is important. Understanding the information is important. Pulling out the information is important. Okay, second vehicle with a cost price of 50 was bought on 1 July 2011. That's even further back. So let's move that up. Doesn't matter where we put it as long as you've got it. It's just a working. The working can be neat or untidy. It makes no difference as long as you've got everything here. So what date was that? 1st July 2011. Was it July, hey? Yes, 1st July 2011. 1 July 2011. How much was it? Cost price of 50 bought and was sold. Okay, so 50,000 here. That's the cost. Cost equals 50. Right, and when did you sell that? 31st March 2016. That's during the financial year, so I need to plot that on my diagram. 31st March 2016. Okay, what else do I have? Keep reading. For 2,500. So I know proceeds here. Proceeds from the sale amounted to 2,500. Depreciation of vehicles is provided for on the straight line method, 20% per annum. Okay, so now we know that vehicle depreciation is 20% per annum. Okay. Anything else? No, that's it. Okay, perfect. So now I look at the information. I can see the information. Okay, I also know that I've got balances because I saw that earlier. Okay, go back to the table. I can see balances here. Okay, so I'm focusing on what assets? The vehicles, aren't I? Yes, the vehicle with the cost price. See? So I'm looking at the vehicles. Okay, so this is all for vehicles. Our vehicles 20%. Okay, so what was the balance? Vehicles at cost 1st July. Right, this one over here. Okay, 995, right? No. 65. Capital is, hold on, am I reading the right line? Just use a ruler as well because you've got the printed copy. It looks like 95 to me.
Yes, 95.
Yeah. Okay, so 95 is the cost at the beginning of the year. Cost 95. Okay, then I also had accumulated depreciation on vehicles 1st of July, which was 53,500.
Yes.
Okay, accumulated depreciation 53,500. Right, so that's what I've drawn on my diagram. Okay, now I just need to look at this. Okay, so if I'm looking at this situation, I sold an asset for that period. So this period, is that depreciation? Yes. You used it, you depreciate it. Okay, and then they said you started that period and you started with that amount of assets, right? Did you hold those assets for the full year? Yes, you did. So there'll be depreciation for the full year. Okay, so depreciation is going to equal 95,000. This was at cost, eh? 20% per annum straight line method, yeah. So 20% straight line. Straight line. Okay, so that's the straight line balance. Right, so depreciation here will be 95,000 times 20%. Okay, for the full year, gives you an amount. 95,000 times 0.2 gives you 19,000. Okay, that's half of the depreciation with the mouse pad. Okay. Alright, so next I need to look at this. So, from June to March, how many months is that?
June, July, August, September,
It's 10 months.
yes.
Let's double check. June, July, August, September, October, November, December, January, February, March. Yeah, 10 months is correct. Okay, so depreciation here is going to be, well, the asset that you sold cost how much? 50,000. You're going to times it by, what is the depreciation rate? 20%.
Yes.
Times it by 10 months, 10 over 12. Okay, that's going to give you the depreciation. So 50,000 times 0.2 times 10 divided by 12 gives you that answer there. Okay, so what am I going to do with those two figures? I'm going to add them up because that's going to give me the depreciation for the vehicles. Okay, so vehicles, there's depreciation equals that amount plus that amount. Okay, then I've shown my working. What did they say in the question? Round off to the nearest?
Rand.
Nearest rand, correct. Okay, so this needs to go. This, okay, that's it. That's fine. Save. Makes sense. Okay, so have I completed that? Not quite. I still need the asset disposal. Okay, so I sold an asset. Okay, so I've done the depreciation bit. I'm happy with that. I still need to do this bit. Okay, you sold an asset. You sold the asset there. I want to know what the cost is there. I want to know what the accumulated depreciation is there. That's what I want to know. Cost isn't going to change, so I'm happy with 50,000 there. 50,000. Okay, now the big question is this, accumulated. Well, did they give you accumulated at the beginning of the year?
Yes.
No, but for the asset that you still, for the equipment that you are selling.
Oh no.
Okay, so would you have to work that out?
Yes.
Yeah, you would. Okay, so it's 20% per annum. Okay, so 50,000 times 20% per annum times that. Okay, that's fine. We just don't know the accumulator at the beginning. That's the problem. So then we're going to have to do the table. So you did a table, that's good. Cost, depreciation, accumulated depreciation, and then the amount, the balance, the value, carrying value. Okay, so cost isn't going to change. When did I buy the asset? Bought the asset in July 2011. So July 2011 to June would have been 1 year, right?
Yes.
So this is how many years? Let's think about that. 4 years. Okay, because it's 1st July, so you'd count July, so July 2012 is 1 year. 2012, 2013, 2014, 2015, 2016, it's 5 years. Okay, so year 1, year 2, year 3, year 4, year 5. Okay, so cost stays the same. What is it? 50,000. Okay, that doesn't change. The depreciation was 20% per annum straight line. Not straight line. Was it 20%? Ooh, check that.
20% per annum.
Where do you see that? Oh yes, you're right. Okay. Alright, so it is 20% as well, so times 0.2. Okay, so there's 20% of that. It's on straight line or diminishing balance? Straight line. Okay, so is that going to change? No, it won't. Okay, so this plus that. Oh no, actually it's just this. Okay, this plus that. Okay, and then you would add up. Oh, I get it. It'll be this plus that. Okay, for all of these. Okay, so it's going up. Do you agree?
Yeah.
Okay, so the carrying value would have been, let's think now, cost minus accumulated. So cost minus accumulated gives you that, and you'd have that for all of the different years. Okay, so looking at that, what is the depreciation at the start of the year?
10,000.
Well, it would have been October. No, it would have been July 2015. Okay, that's what I want. I want July 2015. So what is the opening balance for accumulated depreciation at July 2015? So if I put in dates here, this would have been the first date. It would have been a different interpretation if they wrote this last year. Okay, because if they wrote this last year, then it's actually 2 years ago. If that makes sense.
Yeah.
Okay, rather than 1 year ago. Last year when I wrote this, it would have been 1 year ago. If that makes sense. Okay, so this would have been 1st of July 2015. If they started here, so 2011 to 12 would be 1 year. 12 to 13 will be a second year. 13 to 14 will be a third year. 14 to 15 will be a fourth year. And then you've got the last one. Yeah, so it's 5 years. Is that okay?
Yeah.
Alright, so let's put that in. This would have been 2011, 11/12. This would have been 12/13. This would have been 13/14. This would have been 14/15. And this would have been 15/16. Okay, so we're looking at that. Okay, the final year. Right, so what is your depreciation? 100,000. Okay, did you have it for the whole year? Yes, you did. Okay, so this amount here for depreciation is going to be open brackets. What is the carrying value? 833. Is that right? 833. Where is it? Let's check. I saw 833 somewhere. Oh, sorry. Why am I looking at 833? 833 is depreciation for the vehicle that you sold. Okay, which is what we're looking at now. So that means that in terms of asset disposal, you would have to bring that asset to that point in time. So all you need to do is process depreciation from that point to the end. Okay, because this was calculated on 5,000, which is the amount that you sold. Yeah, that's correct. Okay, so from that point in time to that point in time, how many months? June to March, so it'll be July, and then that's no, it's more than 10. It would be July, August, September, October, November, December, January, February, March. 9 months. Is that the year end? What is your year end here? No, it's June. So March, April, May, June. 12 months. Okay, so in other words, I've got the asset at the beginning of the year. Okay, 50,000. I've taken that asset to that point in time on the 1st of July. Why did I have that though? Oh, that is the pro rata depreciation. Let me write this in. I'm getting confused here. Depreciation. Okay, current year. Okay, so that's the current year's depreciation. We're looking at what happened previously. Okay, there's the schedule for this vehicle prior to what we've got now in your books. All right, so I'm looking at the disposal and the what do they call it? The trade and other receivables, payables. Okay, so I need this. I need the opening accounts, depreciation, okay, and then I need the number of years Okay, so in this case, you bought an asset on 1st of July 2011 and was sold on the 31st of March 2016, okay, at that amount. Okay, so if I bought this back there, I need to bring depreciation all the way through to that point in time. Okay, so need for the opening accumulated depreciation. What would the opening accumulated depreciation be? Well, it would have been all the previous year's depreciation, so that would have been this figure. Okay, for what year though? 2015 to 2016, so that means that period. That's for the current year. This would have been last year. Okay, so 40,000 is going to be what I'm going to start with. Where's my solution? Here. Okay, are we going to show this as equity? No, we wouldn't, because this is a, let's just think now. You've got a product. It's an asset. Yeah, you do have to show it. Okay, so if you show it, it must be here, but it will be at the beginning of the year, and this was for the vehicles that you disposed of. Okay, so this 40,000 would have been here. Okay, this accumulated depreciation for the old assets sold. Okay, that's what you would have had at that point in time, because you had to draw that up. Okay, then obviously 2014 to 15 is last year's depreciation. Okay, so this year's depreciation is 40,000. That's what you're starting with. And then you had the extra bit there. Okay, so depreciation when you actually sell the asset is going to be the 40,000 plus the 83. Okay, so there's the cost and the accumulated depreciation. Okay, what did the question say? The question said was sold for that 2,500. So if it was sold for 2,500, what's going to happen to your package? You're going to have 2,500. That's going to come out where? Think about it. What happened here? You sold it, right? Yeah. For 2,500. Okay, they said the following adjustments must still be taken into account. So have you provided for it? No, you haven't. Okay, so if I haven't provided for it, do I need to? Yes. Okay, so if I bought it for 2,500, did I pay cash for it? They don't say. They just said it was purchased. They say second vehicle was purchased. They don't say how you've paid for it, right? Okay, that's a problem, because if they tell you how you've paid for it, then you can account for it. Right, but we still need to show the depreciation. And then the proceeds. Okay, so the asset disposal is going to be a T account, maybe just to show that, so you've got that. Okay, asset disposal. Right, then you would have cost here. You would have accumulated depreciation there. Okay, accumulated was given. Well, not given, we had to calculate it. There's it. Okay, and then cost would have been that. Right, and then bank, asterisk, CRJ. Okay, this is what you would have received from your estate when the loved one died, which in this case they did. And how much did you get? 31st March for 2,500. It's 31st March, so does it belong in this tax year? Yes. No, because the tax year would end 28th February, wasn't it? Oh no, 28th February is for individual. This is 30th of June. So if it's 30th of June, this must still be provided for. So on 1st April 2016, canvas printing equipment was bought for 15,000. Okay, depreciation is provided for on the diminishing balance method. Okay, so they did provide for the equipment. Okay, there's printing equipment. Okay, so where are we going to show that? Think about it. What is it? It's equipment, right?
Yeah.
Okay, so if it's equipment, where's it going to go? PPE.
Yeah.
Okay, so if I'm selling I sold the vehicle and I bought equipment. Okay, so in your PPE, you're going to show a disposal of the vehicle and a purchase of the equipment. Okay, so the bank here is what you bought and how much, not what you bought, what you sold. And how much did I sell it for? 2,500, because bank's going to go up, disposal is going to go down. Okay, and the depreciation here was straight line, 20% per annum. Right, so look at this, which side's bigger? This side's bigger by a little bit. Very little bit, but it's still bigger. Okay, so if I sum up this, I get that, and I want that on both sides. Okay, so then you'll have, this will be a profit on sale of an asset. Okay, it's going to be equal to this minus that. Ooh, not quite. I think I subtracted the wrong way around. This minus that. I think that's y. Okay, yeah, there's a positive figure. Right, they wanted that to the nearest. 833. Okay, so looking at this, what is the carrying value? Carrying value would be equal to the 50,000 minus the 48 gives you that amount there. Okay, this is a movement of an old asset. Okay, you've sold an old asset. Okay, so carrying value is 1,600. That's going to go here. Where's the disposal? There's the disposal, so negative minus the disposal, which is here, 1,600. Okay, I do need to account for the profit on sale, because remember, what is this for? What type of account is that? Profit on sale. It's income. Okay, so what is income going to do to your income statement?
Increase.
It's going to increase. So profit, whatever profit is, you're going to add an extra 2,500. Okay, because that's something that you would have done. Because that was, let's go back. Yeah, sold for. So if you sell for cash, you would debit the bank, credit the asset disposal. Okay, so bank is going up. Did I put that by bank? No, I didn't. Sorry, that's a mistake. Should have gone here. Where's the bank? Where's the bank? Was there no bank in this question? Oh, there's bank there. 2015. Oh, yeah, here's it. I see it. Just blind, not looking nicely. Okay, plus 2,500 is there. Okay, right. So that covers that bit. Okay, so let's just double check. Okay, that was the tough one. So, vehicle with a cost price of 45 bought on 31st of December. 45 bought on 31st of December. Where is that? A vehicle with a cost price. Did I show that? No, I didn't. 45,000. Oh, no, I did. That was in the past, eh? Yes. Sorry, it's in the past, not now. Okay, and then what else do we have? Second vehicle with cost price 50 bought on the 1st of July. Okay, so 1st of July, there's it. Bought it. And sold on the 31st of March. Okay, so where's March? I sold at the end, so if I sell at the end, I'm going to get rid of one of the assets. So I've sold that asset, so now it's no longer part of our books. Okay, I knew what the cost was. The cost was 50,000. I knew how much I spent, 48. So then the net amount is what they would keep. Okay. Right. Anything else there? Depreciation. I provided for it. Did I record it though? Yes, I did. There's the depreciation. That's fine. Oh, just the disposal needs to be rounded off. Okay. Alright, so that's the tough one. Now it's complete. Okay. Right, so if you couldn't do that one, what do you do in the exam? Move on. Okay, so don't waste time doing question 2 if it's so difficult that you can't create that, because you're going to lose a mark there, a mark there, a mark there. 3 marks. Maybe more than 3 if they allocate more marks to the working. Okay, but the thing is, question 3, question 4, question 5, question 6, those adjustments are easy, simple, they don't take much effort. Okay, so I would have done all of those first, then come back and do question 2 because it's challenging. Okay, so never feel like, oh, because I can't do one line item, I'm going to leave it blank and I'm going to get 0 for the question. That's bad exam technique. Okay, good exam technique is you get your 60, you get your 50, then you go for your 70 or 80 or 90. Okay, so I can do more than 3/4 of this question. If you get stuck on 2, then leave it. Come back to it when you have more time. Okay, that's how you need to approach it. Okay, always, 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 always do it that way. Okay, so number 3 I can do very easily. Canvas painting equipment bought for 15,000 on the 1st of April 2016. 1st of April 2016 is during the current financial year, right? That's an addition. There's an easy mark. Just add 15,000 to your equipment. Okay, that's what they said. They said 1st April you bought equipment. So again, I need to draw a diagram because I would have used the equipment for a portion of the year. Okay, so let me put that there in heading, equipment. Okay. Alright, when did I buy equipment? Where was the date? 1st of April 2016. 1 April 2016. Buy 15,000 Rand worth of equipment. Okay, straight from the question. Depreciation on equipment is provided for on the diminishing balance method at 10% per annum. Okay, so diminishing balance. Okay, 10% per annum. Right, so what else do I know? I know I've got other equipment line items as well. See, here's equipment. See, equipment of 65 costs. So that's what you started with. Cost 65. Okay, what else? Cost 65. What else is there? Where's the accumulator? There's the accumulated equipment. 12,350. Accumulated depreciation. 12,350. Okay, so carrying value equals whatever the difference is. Minus 2,335 there. Okay. So, question. Did you hold that asset for the full period?
No.
Yes. That's what you started with. Did you sell any equipment?
No.
I didn't sell any equipment. So, what I had at the beginning, do I still have at the end?
Yes.
Yes. So, that's the carrying value times carrying value by, what is the rate? 10% per annum. Times it by 10% is going to give me the depreciation for that year. Okay, times 10%. Okay, so there's that. Did I hold this asset for part of the year? Yes. Do I show depreciation? Yes. Okay, so this is prorated. Depreciation equals 15,000 times, what is it, 10%? Times April to June. April, May, June, 3 months. April, May, June, 3 months. 3 over 12. Okay, see how easy this calculation is compared to the one that we just did? Okay, so don't leave out easy stuff if you can do this. Like that you can do easily. Right, so there's the depreciation, show it. Okay, so where is my PPE note? There's my PPE note. For equipment, I'm going to show this. Minus, where's my first amount? There's the first amount. Minus, there's the other amounts. Okay, and there's my depreciation for equipment. Okay, did I dispose of any equipment? No, I didn't. 0 there. Okay, so now we've looked at that point. That point is done. An installment of 17,000 on the long-term loan from Q Bank is payable on the 1st of July. Is that important?
Yes.
Why?
You need to put it in your books.
Yes, disclosure. Okay, short-term or long-term?
Long-term.
Short-term. Why? When is 1st July 2016? The next day.
Okay.
Right? Because it's 30 June, right?
Yeah.
Okay, so if it's 30 June, 1st July is the next day. So that's short-term, right? So where's my long-term loan? There's my long-term loan. Right, so is all of this long-term? No, portion is short-term. 17,500 is short-term. Minus 17,500 is short-term. Okay, short-term portion of the long-term loan. Okay, why do I show that? It's because I'm paying that portion the next day in the financial year.
Okay.
Does that make sense?
Yeah.
Okay. Alright, so 17.5 is going to go there. Take it out of your long term, show it as a short term. Okay, that's just disclosure. It's literally disclosure. Okay. The total comprehensive income for the year after all above adjustments. See, this is nice. After all above adjustments. Okay, so do you have to adjust this further? No, it already has been adjusted. Okay, so that means 19,360 is going to affect my capital positively. Plus 19,360. Okay, then they give you the bank balance. Okay, that's even better. See? I don't have to adjust my bank balance. They gave it to you. Bank balance was 15,450 on 30th of June. Where's my bank balance? There's my bank balance. So I need to just show this is given in the question. Okay, the bank balance there was given as 15,450 30th of June. 15,450. 15,450. Okay, and that's it. Now I've covered all of that. Right, so the last bit is just to tally up and neaten up. Okay, so in this case, the cost here, the cost doesn't change. Vehicles, 95. Okay, accumulated depreciation. Okay, that did change. Right, because you had accumulated from last year, which was that, plus depreciation for this year. Okay, minus the depreciation of the asset that you sold. Where's the asset that I sold? There's the asset that I sold. Minus that depreciation. Okay, because I sold an asset and that's accumulated on that asset. Okay, so then that gives you 32,000 there. Okay, so that was a difficult figure. The vehicles was tricky here. Okay, equipment, would the cost change? Yes, it would. The cost started at 65, you bought more, plus 15. Okay, accumulated depreciation. I started with that. I've got more depreciation during the year. That gives me total depreciation. Okay, then you just need to take the difference. Okay, so obviously land and buildings, nothing changed. So you would have had the same figure there. Okay, accumulated would have been the same amount. Unless they tell you to depreciate the land and buildings. Well, they gave you the accumulated, so they didn't tell you a percentage or anything for it. So I'm going to leave it as is, that figure. Okay, so this figure minus that figure. Okay, the depreciation here is 8,000, so you are going to have to change this one amount. It'll be this plus the 8,000 that they gave you in the question. Come on. No. Okay, delete. Okay, accumulated depreciation is accumulated before plus depreciation during. Okay, it's referencing the formula. Okay, so what was the depreciation? 128. 128. So 128, 128 there plus 8 there. Okay. Right, and that's it. Then obviously just work out the difference here. Costs minus accumulated depreciation. Same thing here. Costs minus accumulated depreciation. Yeah, so this minus that, this minus that, this minus that, and you get those figures. Okay, I need to show that here. So land and buildings, then I'll have vehicles here, and I'll have equipment here. All of it will be CPPE notes. Note number 1. vehicles, paste. Okay. Right, then I would show that. So I would show this amount there, carrying value. There's the one amount. I would show this, the vehicle, and I would show this, the equipment. Okay, debtors didn't change. Keep that there. Current would be the sum of those three amounts. Non-current will be the sum of those three amounts. Okay, non-current and current gives you total. Okay, so this plus that. Okay, and then you've got the equity bit. The equity here, okay, this is 70,000 minus 17,500 gives you that. And then the creditors stayed the same. Okay, current is the sum of those two amounts. Okay, and then we had this stays the same there. Liabilities will be non-current plus current. Okay, and then total equity and liabilities would be what you had here, the equity plus the liabilities. Okay, it's a bit out. Let's see why though. Yeah, it might be out because they didn't ask you to work out 32,000. Did I leave out 32,000 somewhere? Let's see. Is the missing figure. Okay, the only problem is they gave you a balance to work with. So I don't know, are these balances right or wrong, or it's difficult to say. Okay, and that could be the reason why it doesn't balance, because you didn't have to work it out. You had to just use what they gave you. Okay, so these balances might be incorrect. Okay, because normally it should balance based on the information given in the question. Okay, but yeah, that was it. It was, yeah, it's 32 out. Okay, using those figures that they gave you in the question. Okay. Alright, so that was the PPE question. Long question, difficult one, because you had to do quite a lot of calculations here in terms of the asset disposal, and you had to draw a timeline for it. Okay, but the other adjustments were actually quite basic. Those were straightforward. Those were easier to do. They weren't as bad.